All right, candle range theory trader, back with you with part 2 of the perfect risk to reward ratio with candle range theory. So if you didn't see part 1, you'll want to pause the video, go to the description. I'll put the link for part 1 in there. But for those who did see that, we're going to do a back test of candle 3 and look at some possible risk to reward ratios we could have seen on some good candle 3s that took place last week. So for this hypothetical, we're going to start with a hypothetical $200 account. We're going to risk 20 to make 20, but remember that we don't, to the best of our ability, let stop loss hit our take profit. Our risk to reward will be 1-to-1, and on some of these, I'll be doing 30 pip stop loss, 30 pip take profit. Others, I'll be doing 20 pip stop loss, 20 pip take profit. So we'll do this to the best of our ability, but here we go. So we'll go here. We're going to drop down to the 5-minute, and we'll take a look at our entry. So entry criteria is as follows, just fair value gaps. There was a bearish bias on this pair. So after the spread calms down at about 6, we're going to take any and all trades we see and do our best to keep track of the risk to reward here. So here we go. So this is beginning with the day open. Let's see, this is at 625, so the spread, yeah, it should have calmed down by then. All right, so let's go forward a little bit. Oh, I'm sorry, I didn't put the gaps on. I am so sorry. All right, so I'm not going to go back, but here's what I will do. I'm going to see if this would have been in our time frame, this pair here, this candle here. At 1805, that would have been fine. So we do a short here, and I'll do 30 to 30. All right, so there we go. All right, so that would have been our first entry right there. All right, so, but the deal is, if this gap, the gap that you take your entry off of, if it closes, that's my signal that I'm just going to go ahead and get out. So that's how we'll treat that. Okay, so there we go. All right, so let's go ahead now. All right, so that's one TP hit. Our new balance is 240. Let's see if we can find another one. So we have a gap right here. Let's try that one. Okay, so this one I'm going to count as a loss because it took out the gap that I entered on. So it didn't hit the full stop loss. So what I'll do is measure. We lost, let's see, at about right here, about 6 pips. So let's just say we'll lose, like, what was that, 0.06, like say 6%. So our balance at the time was 240. So 240 times 6. You know what? I'll round it up to 10. I'll round it to try to keep the numbers plain. So that's 24 bucks. All right, so 240 minus 24. Okay, it's 216. All right, so that'll be our new balance. All right, let's see if we can find another trade here. We're going to keep that there at 30 to 30. And we're already entering another fair value gap here. So what I'll do is I'm going to wait to see if this green one gets taken. And if so, then I'll use that as an entry. Okay, so the green one disappeared and it's bouncing off of this one here. So that'll be my entry right here. And then we're going to see if this gap right here, okay, holds. All right, we're risking 20 to make 20. Let's see what happens. All right, so that would have been another loss. But we didn't let it get there because this gap disappeared. So on this one, what did we lose? About 7 pips. So we'll say like, we'll say another 10% on that one. So that's about 21 bucks. So let's just say we're down to 198 roughly. Okay, I'm ballparking the math, so forgive me. I'm not really a math person. Now we are near a fair value gap right here. So what I'll do now is wait to see if this green one can be taken. Okay, but it wasn't, but at the same time, we got a new one here. So we'll enter right here. We'll just say right here. All right, so we got our 30-30. This gap has to hold though. Okay, if it does not, then we'll get out of the trade. Okay, so that gets taken. So we'll say we'll go down to like 185-ish, something like that. Okay, let's keep going. All right, so we're back at this gap here. So I'm going to go ahead and enter right there. And I notice too, we're close to the high of the day. So hopefully the high of the day will hold. So I may give this one a little more grace, but I'm basing it off of this gap right here. Okay, so that one did get taken. So let's say we're down to 170. And then we do have another gap here at the high of the day right there. So we'll enter right here. Did that hit? Close. Wait, hold on. Okay, we'll do that. Okay, there we go. And that's TP hit on that one. So our new balance is now 204. Man, are we at the end of the day? No, not quite. Okay, so here's another gap right here. So let's see, we're in 1050. Candle 3, I'm still expecting to drop all day. But remember too, that you want to remember where your range is. You're not trading outside the range bottom. So let's do a quick check on that. And oh yeah, okay. No, we're outside of the candle range low. So we're not going to worry about that one. Okay, so okay, so this day we ended with $4 in profit. All right, so yeah, because we're outside the range bottom, I'm not trading that. So, you know, once it reaches the other side of the range, that you're done. So we get rid of our drawings. So that would have been that one. All right, so 1-to-1, we did not have a very great win rate on this one, but we still ended the day profitable. So let's get rid of these indicators and let's go to the next pair, which was pound CAD. This one was on okay, so this one was on Thursday short. So we will go here, go there. Okay, then we'll drop down to the 5-minute and see what we can see. So let me get my gaps up. And you know, we'll pick up where we left off. Now, sometimes when candle 2 gives a, if price retraces in candle 3 into fair value gaps that were made on candle 2, that's fine to take those too. So, but, so we're going to wait until about 1800 or so to start looking for entries. Okay, so it's 1800 right now. So let's see if we can get up to one of these gaps here or bounce off the daily open. You know what? That's fine. So this is pound CAD. So I will do, let's try a 20-20. 20 pip stop loss, 20 pip take profit. If this gap right here holds, and sometimes what I'll do as well, if it's close to the high of the day, sometimes if the high of the day gets taken, I'll get out as well. But either way, I'm not trying to let it get all the way up here. That's the point. Okay. Got to control the risk. Okay. But now we're doing 20-20 and see if we can get our winner rate up. Okay. The gap's still holding, consolidating. Okay. And that one did hit. All right. So The entry was at about right at 6 o'clock. Exit was at 2 a.m. Eastern Standard Time. So our new balance is 245. Let's see if we can get any more. Let me mark the range bottom so I'll know when to stop trading too, so I don't make the same mistake as I did earlier. Okay, looks like it's already there. So that was fast. All right, so this was the range bottom right here. All right, but either way, it's still a 20% day, right? So obviously if your account balance was bigger, you would have made more money, but this is good. All right, 20%. If you can make 20% on your money a day, you're doing better than most people. Okay, so that was that one. We'll get rid of these drawings. And we'll go to Aussie dollar. So Aussie dollar was a long on Wednesday. So we look for the green fair value gaps. Select the bar. Go down to the 5-minute. Okay, and we started 1800. Here we go. Okay, this is still in the 5 o'clock hour. Let me go forward a little bit more. When I'm trading daily chart, if I can be in near the daily open, that's fine. As well, too, if you want to do inverse fair value gaps, you can definitely do that. You can look at the video on my channel about that. It's just where the red ones disappear. But let's see. So we have a gap here. I want to see how price reacts if it gets down there. Okay, you know what? Let's go ahead and we're going to see if this gap can hold from yesterday. So we'll go ahead and do, this is Aussie. I'll do a 2020 on this one. And let's see what happens. Okay, this gap right here, this little gap right there is still holding. It pinned it, but it's still holding. So no reason to get out just yet. Whoa, okay. I don't know if that was news or what, but yeah, our take profit was hit. So that was that. So our new balance is now 294. And let me see where it's at in relation to the candle range. Yeah, we've already exceeded our high. So that was that one. Oh yeah, because there's candle range high right there. So, you know, no problem with me though. I'll take that win. So we'll remove those drawings and go to the next one. Okay, so Euro Swiss was a short. I think it was on Friday. Yeah. All right. So let's see what we can get. We may be able to just get one out of this one, but let's take a look. We'll select the bar. We'll go here. Okay, now we'll drop down to our 5-minute and see what we can see. So we wait until about, like I said, 1800 hours. But obviously, as we can say, we have the benefit of hindsight. We saw that it was a straight drop. So right here at, I'll just go ahead and get in right here, right at 1800. This is Euro Swiss. It has a lower ADR, so I would do a 2020 risk to reward like that. Let me mark the candle range low too, so I know when we're done. Okay, so that's the low there. And let's see what happens. Remember, if it gets to half your take profit, I'd go ahead and just set it to break even is what I recommend. So if I was risking, let me pause this real quick. If I were risking 59, once it gets to 30 pips in profit, I set this to break even. But anyway, let's keep going. Yeah, I think that it dropped on news, I think. Or maybe not, I don't know. Okay, but this gap did hold all day. It did consolidate quite a bit, but eventually it did drop. And there we go. Take profit was hit right there. So that was it was like an all-day hold. But yeah, that didn't take profit. Take profit didn't get hit until 7:45. So, but this is a lower ADR pair. So it took just about all day to go 20 pips. But at the same time, because this gap held, you just hold on to it. So that was another win. So our new balance is now 353. And then the last one, I'm not sure which day this was on. And I haven't even touched the 8 hour. These are just dailies, but you can also do 8 hour candle range theories, candle threes. Okay, so this was another long on Wednesday. So we'll select the bar, go here, drop down to the 5 minute, and we're looking for those green fair value gaps after 6 or 1800 hours, or inverse fair value gaps, either way. Or if we can get in around the daily open, that's fine too. Okay, so what time? This is still after 5. Okay, one more. I'll do a couple more. Okay, so this is right in the 6 o'clock hour. I'll do a 20/20 on this one because it's got plenty of, just those gaps that have been created. If they can hold, I'll stay in the trade. And let's see what happens. And like I said, you can do price alerts too. What I like to do is set a price alert below a gap that I don't want to see get violated. So in that case, it will be this one right here, the one on the bottom. But okay, let's play this out. But you want to see more gaps being created. That's the hallmark of candle 3 behavior. Strong momentum, more gaps that hold. And there you go, take profit is hit. So this one was about a 6 o'clock entry. Take profit got hit a little after midnight. So that would have been another 20%. So our new balance is 424. Okay, so we've doubled our account. That's just hypothetical, but as you can see, you saw how I handled the losses, the wins on the candle 3. And so you just look for them. That's all you really have to do. And then don't be afraid to take it because you already know your worst case scenario. And then you just keep going. But we doubled the account just trading candle 3s and fair value gaps with the candle range theory. So, and we lost a couple, but it was no big deal. So, but that's how you want to handle it. That's what you want to look for. But you have to stay disciplined. Don't fall for the temptation of not setting a stop loss because you already know your worst case scenario before you get in. Don't try to give it more time. If it goes against you, if that gap closes out, just take the loss. It's no big deal. You can always get right back in. Okay. So that was that. I hope that's helpful. I know it wasn't that organized, but at the same time, this is what you're looking for. Trading is, I wish it was more succinct, but sometimes the chart is messy, but we just got to roll with the punches. So that's how I would handle it. 1-to-1 risk to reward ratio is all you need with good risk management. Get that win rate up and you'll see, I promise your account will grow. But I appreciate you watching. Thanks for your time and attention. Have a great rest of your day. Take care.